Hello guys, this video is as a result of a post I made recently on my WhatsApp status. So I posted regarding the sales of GTBank shares that they are selling currently, right? And in that post, a lot of my contacts are asking for me to explain what it means for them to buy shares, what it means for a company to be selling shares also. So this video right now is as a result of that question to explain what it means when a bank or any other company is selling shares. So what does it mean? So when a bank or any company is selling shares, it means they are offering ownership stakes in the company to the public or private investors. So these shares represent a portion of the company's equity. And when you buy a share, you become a part owner of the company. So let's break this down using the example of GTCO, Guaranty Trust Holding Company in Nigeria as a case study, because currently now their shares is still on sale. I think around 44 naira 50 kobo per share, stuff like that. So what does it mean when a bank is selling shares? So when bank are selling shares, it could mean number one that they are raising capital. So banks like GTCO or any other banks or any other companies may sell shares to raise capital for various purposes, including expanding operations, investing in new projects, or strengthening their balance sheet. So instead of taking on debt, they sell shares to the public, which provides them with the needed funds without the obligation to repay it like loan, right? So that is one thing that it means when companies or banks are selling shares, they are raising capital. Another thing it means is that there is what they call initial public offering IPO, and also there is also secondary offering. So what is IPO? When a company sells shares for the first time, it's called the initial public offering. That is for the first time. Now GTCO or GTBank has already gone through this process. It's a company that is trading publicly, so they are likely engaging in the secondary offering if they are selling more shares at this moment. So they are not offering IPO right now because they've already done that. Currently what they are selling is secondary form of secondary offering. So secondary offering occurs when a company that is already publicly trading like GTCO issues more shares. This can be raised this can be to raise additional capital or allow existing shareholders to sell their holdings. Yeah, right. So now how does it work? How exactly does this work? Now it works like this. GTCO announces the sale of shares, or any company will announce the sale of their shares and specify the price at which they will be sold. So as at now, GTCO is selling a per share is 44 naira 50 kobo, right? If you are their customer, I think you received this email. I got that email and I got to know about it from other, it's public knowledge. And also I received the mail because I'm a GTCO customer. So they announce it, and then the price, they put the price there. So investors, both retail individuals or institutions, large organizations and pension funds, they can purchase these shares and all that. So now another question I want to look at again is what happens when you buy GTCO shares, or what happens when you buy any company share. Number one that will happen is that you have part ownership and voting rights. Just like I mentioned earlier, that when you buy a company, you become, part of that company. You can vote, you can attend the shareholder meeting and all that. So when you buy shares, so example right now, like the GTCO shares, you own a part of the company, right? You own a part of the company. That means that you can attend their meeting. This ownership gives you the certain rights, including voting at shareholders meeting, like I said, on important issues such as the election of the board of directors, managers, or other major corporate actions. That is one thing that happens when you buy a share from any company. You have the ownership and voting rights. So the second thing is that you have dividends. So as a shareholder, you may receive dividends, which are payments made out of the company's profits. So GTCO might distribute a portion of their earnings to shareholders periodically, or usually quarterly, like maybe three or 4 months interval. So when you buy that share, you have dividends, something that comes to you because you are a public shareholder. You have part of the company. You'll be getting some dividends out of the your investment based on how much you invested. I'll be getting. So the third thing that will happen, or what happens when you buy the GTCO share, is that you have capital gains. So if the value of the GTCO shares, or any company that you bought the share, if the value of that share increases over time, you can sell your shares at a higher price than you paid for example now, they sell the shares currently at 44 naira 50 kobo. So if in the next 5 years or in the next 10 years, the shares become 1,000 naira per shares, right? You've made a lot of profit. Or if it becomes 100 naira per shares, you made a lot of profit. That is what capital gains is. However, share prices can also fall, so leading to potential losses. So as you are speculating this, that okay, what about if it goes up, right? If it goes up, you make money, but don't always believe it will always go up, right? Because due to a lot of factors that are affecting these things, it could also come down, and that will be a loss on your part. So these are some of the things you need to know before you invest. So the other one there is risks. What happened? We are talking about what happens. Mentioned three things that could happen. The fourth one is risks. So investing in shares carries risks. So the value of GTCO shares can fluctuate based on various factors, right, including the bank's performance, the overall economy, and the banking sector health. So if the bank performs poorly, the share price may decline, it may go down, and you could lose your money on your investment. Like I said the other time, as you are speculating, you are believing that, oh, this thing is going to be good, the economy is going to improve, GT Bank is going to, appreciate, their shares is going to go up. So know the risks also, that a lot of things could happen. Economy could happen, just like we say in Nigeria, that Nigeria could also happen. Things could happen that the economy could go down, the shares might also go down, a lot of things could happen. So another thing you have to know is what could happen when you buy a share is in market liquidity. So GTCO shares are traded they are traded on the Nigerian stock exchange, Nigeria exchange, right? This means that if you buy shares, you can sell them later on the exchange. So the ease with which you can buy or sell shares depend on market liquidity. So that means that how actively the shares are being traded, right? So it's currently traded, is a public trading company, so you can trade the shares if you buy. Now that is I've covered what it means to buy a share at that bank or any other company and what could happen, right? So now let's talk about the specifics about the GTCO current share sale. So the purpose is that if GTCO is selling shares currently, they are selling shares currently. It might be for reasons like expanding its operations, investing in new technologies, or strengthening its financial position, or it's like the central bank mandate them to also sell the shares, right? So another specifics is on the pricing and allotment. So the bank will determine the price at which shares are sold, which I've said the other time, 44 naira 50 kobo, which could be based on market conditions, their currency price, and investor demand, right? So another thing is impact on existing shareholders. Like, what does this mean for existing shareholders? So the sale of additional shares could dilute the ownership of existing shareholders if new shares are issued. Right? What does it mean to dilute? For example, now, if you are having an equity in a company, this dilution of this it's another content, like another topic of it. So I'm going to make another video to explain what it means for a shares to dilute. Okay, but for the brief moment now, this means that the percentage of the company that each existing share represents will decrease. Let's say you have 10,000 or 10 million shares before, and that 10 million shares, or like, okay, let's say 10,000 shares. So in that 10,000 shares, it represents, like, let's say 5% of the company, right? So now that they are offering more shares, and then that means that a lot of other people will be able to buy shares also. They'll be part of the company. So that 5% you are having will be reduced. So that is what it means for that dilution of shares and equity, right? So in summary, buying shares from bank like GTCO or from any other company means you are investing in the bank's future and becoming a part owner of that bank. So it offers the potential for financial gains through dividends and capital appreciation, but also comes with risks of its own, including the possibility of you losing your current investment if the bank underperforms. All right, thank you so much. I believe I've been able to answer the question that I'm asked regarding to explain what it means to be a shareholder or to buy shares at any company, either a bank or anyone, particularly this UTCO. So see you in the next video.